Morning, everybody. Welcome to the morning show, Stock Market TV. Spencer Israel, JC Parets, Steve Strazza. We got the whole gang together this morning. Where else would you rather be than right here, right now, in front of your screen, looking at charts? Because yesterday was a day that will live forever. I mean, every day lives forever, but yesterday was a day. Let's talk about yesterday, huh? Oil markets. Oil market, yesterday was so crazy that this morning on my chart, I was like, oh, oil's flat this morning. Nope. It's up 6%, but it didn't register because my chart's all messed up now from the range from yesterday. So we'll talk about crude oil. We'll talk about implications, how to think about it, put it all into context, okay? A lot going on there. We'll have Mr. Bart's charts himself, James Bartoloni, on the show at 9. Kenny Glick will stop by. Dr. Phil will be here. So that is the plan for the day. You guys ready? Let's do it. Here we go.
Miss me?
No.
Good morning.
I miss you,
buddy.
guys.
Good
How's
to
it
have
going?
you back.
Good to be back. Good to be back.
How
Done
was Miami?
soaking up the sun in Florida?
Dude, it's awesome. You know, yesterday, before we flew back, Morgan, my wife, she was just sitting there on the pool, having a glass of champagne or a beer or something. All the kids are running around in the pool. It's a beautiful day. Like, we're leaving in a few hours. She turns to me. She's like, I love Key Biscayne.
And lucky for you came back and the weather has turned. So it's spring. So it's nice.
Yeah, for a few days.
Oh, so negative over here.
No, I mean, yeah, it's nice for a couple of days, and then it gets back to shitty again. I mean, it's
Jeez.
beginning of March. What do you want? So what did I miss? What do I need to know? How's the market? Did it fall apart? Did it crash like everybody said it was?
Well, were you on Twitter Sunday night? It depends.
Dude, Sunday night I was with Strazza having cocktails on Ocean Drive, and then going to Joe's.
Okay.
See the Dow's down 1,000, as we're eating stone crabs. And then, by the time the market opened up and, the market was ripping, I mean, that's the market for you. I remember a similar time, Strazza and I in Miami together. You and I at that Japanese joint, remember? And I'm like checking the crypto futures, remember? And I'm like, look at Solana's relative strength right now, right? Market ripped after that.
This has happened a number of times now, where for whatever reason we're hanging out and futures are getting wrecked. But we talked about it on the show yesterday. We said, they were down 2.5% at one point, the NASDAQ futures, late night, Sunday. Closed positive yesterday. Spencer, what did we say? If they dip them and rip them, look out. We got a lot of, that's a nice little shakeout, right? In a market that's just been absolutely plagued by headline risk for over a week now. If you look back at some of the most risk-on offensive areas, they bottomed weeks or a month ago. And I was talking to somebody last night. I said, cryptos are going to take off here because tape's been volatile, and they're breaking down the weakest areas, at least trying to. If you look at financials or something like that, this has been a great opportunity for the sellers to come in and resolve some bearish patterns lower, right? All the volatility in the market, futures down big every other morning, it seems like, since Monday of last week. They can't break the cryptos down. So at a certain point, this continuation pattern has to fail, and there's only one other direction that it's going to go in if it's not going to go lower. I think the cryptos are about to go higher.
It always comes back to, when you study all these technical analysis books, right? They're always talking about these continuation patterns and reversal patterns and everything like that. But I don't think that there's enough emphasis. And when my book eventually comes out one day, I've only been writing it for 13 years or whatever it is. So ultimately, when it comes out, I'm going to make a big emphasis on when these patterns do not resolve in the direction of the underlying trend. Like, that's the whole point of continuation patterns. You tend to see them often in trends. That's why they're continuation patterns, because the trend continues. But I don't think enough emphasis gets. So I got an Ethereum chart here for us that I think really kind of, sets that, tone. So if continuation patterns do not resolve in the direction of the underlying trend, look out. Look out, because the reversal is nasty. Look at the TLT going back here. Throw up slide 4 there, guys. Throw the TLT back in 2016. Go look at that. It was an uptrend in treasury bonds. Beautiful consolidation. Resolved lower. Bonds crashed. Interest rates ripped. Market ripped, for that matter. Stocks, right? So, this is a classic continuation pattern. You can call it a rectangle. You can call it an ascending triangle, rising wedge. Everybody's got a name for it. There are different pure definitions. But the point is, it's basically like a little messy mess within a trend. In this case, obviously, the trend being down. When those things do not resolve in the direction, which is currently down, that's the signal. So I think that this is exactly what Strazza is talking about. Am I wrong?
Yeah, and this is a bearish continuation pattern. And you have, like you said, JC, you have continuation patterns, you have reversal patterns, and then you have failed patterns. And this is a bearish continuation pattern that sure looks like it's about to fail and break higher.
Yeah. I'm with Strazza on this one 100%. This is as clean as they come. This is a classic. This is like chapter 3 of the technical analysis books. By the way, before we get any further, I was away when we all found out that John Murphy passed. So just, rest in peace, Murphy.
Yeah, big one.
I got him back there somewhere.
Big one.
Oh, here it is. There it is. This is where it all started, this one.
So good.
I don't even have the cover anymore. It's so beat up.
I don't have the cover.
This is it. I was in chapter 3 of this book right here. I don't have the cover.
You can't even. Yeah. There you go.
There it is.
Wow.
Technical Analysis of Financial Markets by Murphy. This is it. If it wasn't for this book, I wouldn't have gotten into technical analysis. I wouldn't be here. We wouldn't be doing these conversations every day. It all started here. So big shout out, John Murphy. Rest in peace. It's a bummer. He was 83. What do you want?
That's hey man, that's a good life.
Revolutionized analyzing markets. He's the godfather of intermarket analysis, right?
Yeah, that's the other one you got to read.
What the hell do we do here all day, every day? Talk about intermarket analysis.
You can't just have one John Murphy book. You got to get yourself the intermarket analysis too. That's an incredible book all on its own.
Yeah. Yep.
On that note, should we do a state of the markets?
I think we should.
Okay, then.
All right, guys, we're back, man. We're back. The Dow, 47,600, over 2,400 points away from Dow 50,000, Dow 165 today. S&P's down about 1/3%, 67.81, down 20 handles. NASDAQ 100 futures, pretty flat, 24,940 on the NASDAQ futures. You got 30-year bond futures are flat, a little over 116. Crude oil down almost 5%, back to 90. You got copper, about 50 bips, 587. Gold up 1.7%, just under 5,200. You got silver up 5%, back towards 89, with the VIX at 25. That's pricing in roughly a 1.5% move in the S&P 500 per day. Pricing in, that's just like that would be normal, would be 1.5% up or down, for the record, for the S&P 500. That's what VIX there means. More than 1.5% technically. And in funny money land, Bitcoin really ripping this morning, up 3%, 70,465 for Bitcoin. Ethereum, 20,000. Freudian slip. Imagine you think Ethereum's going to get to 20,000 one day? I do.
Sure. It's been
Ethereum 2,050, up 3%. Solana 8660, up 2%. Total crypto market cap, Mr. Spencer Israel inching higher, 2.37 trillion.
What's the all-time high in Ethereum? Is it 48? Is it 4,800 or 5,000, somewhere around there?
Yeah.
Okay. All right. So
4,900. I think he may have kissed 5,000 for like a hot second. Did it ever get there? I forget. May have kissed it. I don't know, but it was right there. So what stands out from this morning's futures?
Nothing. I think a follow through day today would be huge. If they start ramping them, midday or mid morning, look out. A big follow through day here would be incredibly meaningful. We're at some big levels. Some, distribution patterns like the one in XLF will start to fail. Other things like tech clearly digging in, at its range lows.
Right where they had to.
Yeah,
software, right. Speaking of which, right where it had to.
Software. These are market leaders. Software stocks. Okay. Software stocks have been market leaders for a couple of weeks.
Market leaders.
Market leaders. Are they
wow,
not?
You guys hear that? I hope you guys in the chat are paying attention. There is nobody on this here planet of Earth. There is not a single soul in this earth that is saying that software stocks are a market leader. Spencer, anybody saying that?
You heard it here.
Not a soul.
Well, the people that are saying it probably don't also know what has happened in the past couple of months, right? They're just thinking that it's like 2018 still. So,
or they're just still holding bags.
Yeah, that too. Yeah,
there's a lot of that.
But they definitely don't. So no, there's no one that pays attention that is saying software is market leaders, right?
So it's hard for me to accept any other answer because I'm zooming out over 10 years here on the IGV relative trend. And this is not even like a super short-term indicator, but on a 10-day rate of change basis, you've never seen this kind of outperformance in software. I don't know. How far do you have to go back? 15% in the IGV SPY over the past 10 days. I'm going back to 2012. I don't see anything this big ever. So I would say not only are software stocks market leaders, they've never been such market leaders.
Hold on. Let's explain what you're describing here, because this is really important. If you don't know what he's talking about, essentially you have the software index fund, right? That's like the ETF that has like all the big software stocks, Salesforce, Adobe, all the big softwares, Oracle and all that stuff. You're comparing the performance of that basket of software stocks, which has obviously gotten slaughtered over the last, several months, relative to the overall S&P 500, right? The benchmark for U.S. equities, and making that comparison. What Strazza is saying is that over the last 2 weeks, over the past 10 days, the rate of change between the spread, in other words, between those two baskets of equities, software versus the entire market, has never outperformed by this much, this fast, ever. Okay. And what we know historically is that when this sort of momentum thrust occurs, if you will, on both an absolute and relative basis for that matter, same idea, that very, 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 very consistently happens very early on in major trends. That is evidence of initiation. That is not evidence of exhaustion. How am I doing?
I would agree. It's like starting line trend momentum. You see it at inflection points. You see it off of major lows. You see it in the first inning of a new trend. Software stocks were underperformers for a long time. We talked about this all throughout February. If you're coming in and piling on to the bear porn for software stocks and the bullshit getting eaten by AI narrative,
a lot of bear porn,
you're super late, right? It's been going on. And I think that trend ended and is officially reversing. Jason Huang says Palantir is the only software stock that matters. The next software will be built upon Palantir. Cool.
Let me ask you something, Mr. Steve Strazza.
Yeah.
You're not like Mr. software expert per se, but you are, I would say, in my regard, very strong expert in sort of the fundamentals of these sorts of companies, right? So just kind of like technicals aside, do you really believe, that, and if you don't know the answer, it doesn't matter, but do you believe that software stocks are actually this is a big secular problem for them or no?
Do I believe that the AI thing's a secular problem? No, I don't think so. I think that there will definitely be some software stocks who are disrupted and won't be around.
And some that are winning.
Right. And there's going to be other ones that are just fine. I care more about the Microsoft, the ServiceNow, the Salesforce, right? If they keep putting up 15, 20% top line growth, no, I'm really not too worried about software. And at the index level, something like IGV will continue to be just fine.
Yeah.
Companies can go bankrupt, right, and get disrupted all the time. we rarely make this big of a deal about it.
I mean, who's making the big deal about it? The market, for one. It's not just journalists, right? Software stocks are killed.
I mean, the truth is the market freaked out about this. I mean, they killed these stocks. And in many cases unfairly, because there's been zero fundamental deterioration in the biggest, best software names, in the United States.
Is that true? Is that true?
Yeah, their performance hasn't changed at all. And these stocks are down 30, 40, 50%. So I'm buying.
Here, throw up the new slide too. So this is what Strazza's talking about here. This could potentially be one of the greatest whipsaws of our generation.
Which one?
You
know, oh man, look at that. But that's that 10-day rate of change. You can see it right there in that line.
What do you think? I mean,
Great.
like, to me, I have been studying whipsaws my entire life. I shouldn't say my entire life. My entire trading life, right?
Yeah.
23 years. You know why I've been studying whipsaws for 23 years, Mr. Strazza? Because I used to get whipped around like a mother.
Yeah.
So I learned the hard way, and then again, getting back to the books, like the technical analysis books, like your support, resistance, but and then but be careful because they could fail. And then, you want to get out if they fail. I feel like, which is fine, understand the risk management. But I think that, again, there's a little emphasis on the implications of that failure.
Right.
So rather than looking at these failures as like negative consequences or in a negative connotation and using words like but, very intentionally look for those types of opportunities because we know the implications of those unwinds are spectacular. And, everybody's got a name for it, from failed breakdowns, come fast moves, Barry Brian Shannon, Scott Redler calls it a red dog reversal. Right. The Japanese, you got to hammer it in a bot. Like, everybody's got like a term for basically the same thing. And so here's that 10-day rate of change on a relative basis. We see this at the beginning of things, not at the end. We're coming on our 3-year anniversary of the morning show, by the way, Mr. Strazza, in a couple of months. Did you realize that?
Yeah, May. Can't wait. I mean, we've been doing this. We're going to have what, like our 1,000th show coming up next year.
How many times have we talked about these momentum thrusts, right? And what's happened after that? Like, a lot of times, and then we always point back, be like, yo, remember that week at the end of September in China, bro? Freaking Shanghai ripping. What happened after that, right? I mean, small caps, right? They did their thing. Biotechs did their, like, there's always like this thrust. Like, and, not always, but like, when you look at these thrusts, look what happens afterwards. 6, 12 months later, 18 or more. We'll see what happens this time, but that's what we know happened a lot of those other times.
Like the first level technical analysis thinking in a situation like this, we'll say, oh, that's a top, stay away from software. Then second level, because it does require a degree of anticipation and inner market thought. You don't want to look at like a trend in the tunnel. So second level thinking would look at something like this and say, man, the market's fine. Semiconductor stocks have been good. Growth is digging in here. The cryptos are working. All these things which are highly correlated with software. Maybe, just maybe, like JC's saying, this is a big candidate for huge shakeout or whipsaw and a move higher. Right. And then you see that and you see price now failing, trying to get back above this key level with the initiation style momentum reading here on the 10-day. And you got to be thinking, you have to be leaning in the direction of failed top right now with this. And you got a perfect level to do it at.
That's it right there. What you just said. That's the best part. Of all this, that is by far and away the most important part, is that the levels are very, very clear. Go back and throw up my chart real quick. You can zoom in on the price itself on a relative basis. Let's say you're not in. Let's say you haven't gotten in and you're looking for an opportunity. Well, those former lows, that is the 2018 low, Q4 2018, big time low for the market, right? Big time low. I was roasting a pig in Miami in a Cajachina, right? When that happened, right? I know where I was, and I was selling all my bonds, right? On Christmas Eve. It was fantastic. If I would have been smarter, I would have taken the other side of that trade that same day, but hey, you take what you can. Then there's the end of 2022. When everybody's telling me it's a bear market, I'm like, why do all these stocks keep going up? Remember that one, Strazza? Those are good times.
Oh, yeah.
Good times. Major bottom. The NASDAQ doubled after that. Okay. Big, kind of a big deal. And so now, more recently, they overshot them, right? They overshot them to the downside, and now we're back. And we're back to the scene of the crime, where that 22 bottom was, where that 18 bottom was. And so how does the market react? Is this one of the biggest, if not the biggest whipsaw in a generation, where we'll look back years from now and be like, remember when all these idiots thought software was done? Like, Are we going to look at it like that?
Yes.
Or is this just the retest of those former levels? Now we roll over, and that's the end of software. Like, that's the binary situation that we have ourselves here right now. Whether you like it or not, that's just what it is.
I'm with you. Just use this level. If I had to pick, I think you know where I stand.
We know where you stand. Strazza's loaded up in software stocks and tech stocks. We know, bro. We know. You see how we keep slipping it in?
What a nice reset this would be, right? For this AI boom, technological revolution. If software stocks just got hosed right in the middle of it and then dug in and went, that'd be great. I would love that.
How do we feel about market breath?
I'm okay with it. The industrials took a bit of a hit. Financials took a bit of a hit. I don't think those things are great. But if large cap tech can get back on track here, big growth, that fixes a lot of things. I think that makes up for any deterioration in breadth. What do you think about it?
40% of the S&P 500 is up this month. It's probably a lot more than most people think.
Yes,
in March.
Definitely.
March. Would you agree with that, Spencer?
I'm okay with that.
I wouldn't have thought it was anywhere near that amount.
I bet you most people didn't.
You thought it would be higher or lower?
No, way lower.
Yeah, you'd think lower, right?
Yeah.
And then another fun fact is that this year you got 60% of the S&P 500 is up.
Up how much percent?
Is up.
Up?
Yeah, up how much? That is the question, Steve, actually.
Well, the median S&P 500 stock this year is up. The median stock this year is up 3.1%.
Okay. Not bad.
Great. I'm okay with those numbers. S&P's been sideways.
Yeah. And so, as we know, the best 3-month period of the year is November through January. How'd they do? Right? And we know historically that, February into March tends to be a problem, right? That is the worst part of the best 6-month period of the year, which goes from November through April. And so within that sweet spot of the market cycle, this is the weakest part, right? What have we seen? So that end of March, April period going into May, historically a strong period. And then you get the sell in May and go away and the doldrums of the summer, and then the cycle keeps going, right? So that's what we know. We also know midterm election years are some of the worst. Something always happens. I want to give a huge shout out. And if you can find the link, drop it, guys, for me. The podcast with Chris Verone and Daniel Clifton with Josh Brown and Batnick, Compound and Friends. Excellent job. I didn't know Clifton's work very well because I don't follow politics or anything like that. But the way he, kind of brings that back to the market and what we're seeing is really, really amazing. I can see why he always wins institutional investor, analyst of the year or whatever, a million years. So I can see why. Very good work. And then Chris Verone, obviously, I'm a huge fan of him and Todd Sohn and that whole crew. So, one of the things that they were talking about was, there were so many good pieces. But they were just talking about, generally speaking, just market breadth. There's so many countries around the world doing well, so many industry groups doing well. If this was a start of a new bear market, it would be a very strange one. With, bear markets don't happen with most stocks going up, right? This is not, by definition, that's just not what a bear market is. And so if most stocks are going up, it's hard to call this a bear market. Kind of the way he put it was pretty good. Also they were talking about the rotation into industrials. Right, this for a long time was a consumer-driven stock market and economy, and the transition into more manufacturing industrial complex, he thinks is a real secular shift. And while we've certainly seen that in the data, so I can't disagree because the market obviously agrees, I hadn't quite thought of it that way.
I like that.
You like that?
I like that.
He also says that semiconductors are cyclicals.
Are cyclical. Been
Yeah.
saying.
Yeah.
Spencer doesn't like that take.
There.
Spencer always argues with me when I say that.
I mean, aren't they like the modern day transport stocks? So how could they be
big economy stocks? They're economy stocks.
Everything in life requires chips.
All right, guys, listen, I missed you guys a lot. I really did. I generally missed Spencer Israel and Steve Strazza, even though I got to hang with Steve for a minute. I miss Phil Pearlman. I miss talking to Kenny. Kenny just brings a different energy to the day that is unique to him. If we can, I guess we can agree with that. So why don't we see what Kenny's watching this morning and what we're putting on? I'm ready to put some money to work. Let's go.
Kenny's been having himself some good days. Let's talk about it.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola.
Oh, there he is.
Good morning.
I missed you, bro.
How you been? I missed you, brother.
Just getting some sun. I didn't get too bad. I was pretty good. I tried to take care of, I'm not like overwhelmed in sun.
You're pretty pale for a southern boy.
I try to, I got to protect my skin,
Yeah. I got some color yesterday. I stepped outside the house, 70 degrees outside. I was
Kenny,
watch
how
that
the
head. Make sure you put the sunscreen.
Kenny, how the hell can anyone like go home overnight, short or long, anything in this market, right? You'll just get run over.
Well, I got to put it in perspective. We talk a lot about how this has been the best trading environment in a very long time. So there's like 5 days a year where it's just a holiday for us, an extravaganza, a gap down faux show bro day where you could basically slam your fingers on the keyboard, hit the buy button, you're up 2,500. You get 5 of those days a year. We've only had 42 trading days so far in 2026. We've had 15 of those days. This has been otherworldly because now all the selling, and again, to your point, this is definitely not a bear market. The balls are still on my neck. You cannot stay short, but there are opportunities to short the market. Going into the weekend right now, there's usually more volatility over the weekend when there's volatility abound. But it's so contained, and the underlying bid to this market is relentless. So even when you do break down, even though you have the signs, volatility products were up and we were breaking down under certain near-term levels, we still came back and it became a faux show bro day across the board. I mean, again, it is just impossible to remain a shorter, which is a great market. It's trying to go down. And right now it's all lining up for what I was predicting. But I think that mini crash that I was predicting has happened. We were only 15 points away from that sell-off. But again, to your first question, you don't need to have overnights because the intraday action is by far the best I've seen in 30 years. And it's relentless. It's the same day over and over again. And when we talk about watch lists and we talk about go-to names, I have my go-to names. And guys, if you're not trading Alcoa at 57.50 long, it's now going on 3 months. It's just beautiful. It's trades like that where you can just, you have a bread and butter trade. We've got our faux show bros on earnings reports. We've got our, intraday, wonderful trade that works so well on the earnings reports. Now it's across the board on basically every stock. You love the Coinbase, you love your hood. Every dip is being bought. So when you see the markets being sold off overnight, you come in the next day and it's just a party. And it really is the best trading I've ever seen and ever. There's never been a comparison. So we could
tell me more about Alcoa, Kenny.
What?
Tell me more about the Alcoa.
Alcoa it's a very weird stock because it's been in like this consolidation phase where it's been in a mini downtrend, but it's being accumulated at the same time. And then it had a blow off top and then a sell off. But every time it's at 57.50, buyers show up. So if you get the faux show bro around that price to confirm that bias, or again, this is exactly how most of these trades set up. You have your idea, and then you wait for that pattern to show up, and then let it be validated by VWAP. Alcoa does it almost every day, and that's why it's a fantastic stock to trade. And again, also showing you the rotation of this market, your energy, oil, materials, and that what. But it, like I said, it is an extravaganza of opportunity. And if you're not making money in this market as a day trader, swing trading is a little bit more difficult because these big swings. But if you're not doing it right as a day trader right now, stop what you're doing. Call me. I'm not even trying to be funny or, not trying to be subtle here. If you're not making money as a day trader right in this market, you're doing something wrong, because there have been, like I said, you get 5 of these days a year. We've had 15 of them. And, yesterday was so good that I'm just chilling today. I have no desire to trade today. Yesterday was a day where you could take the rest of the week off, if not the month. That's how awesome it was.
Listen, Kenny, I know that you're looking at this from an intraday perspective. And so since today, you're kind of taking it a little slow. By the way, Kenny says he's taking it slow. In 30 minutes, he could be super long in a position. Kenny changes his mind quite a bit from what he says is on the show to what actually happens an hour or two later, because he actually doesn't know. He's not just being, a schmuck. Like, things change. Like, what do you want? What do you want him to do? So keep that in mind, number one. Number two, can you throw up slide 2 just to give the folks some perspective? If you're not a day trader, or even if you are, just some color on the overall trend of this thing. I mean, this thing, I'm thinking about buying this today, as a matter of fact.
Which one? What are you talking about?
Throw up the Alcoa. Throw that up on slide 2.
Yeah, fantastic. It's one of the only stocks I've been selling puts on it, because every time it goes near 55,
you're not wrong.
You're
not wrong, but here's why that's happening, right? Zoom out. These are key levels going back half a decade, right? So if we're above those levels, you got that $100 roll. Everybody get your roll on. What? Everybody get your roll on. What? Right? You know what I'm talking about. The kids used to dance to that, right? Blow the whistle.
The kids. Yeah, it's been a great trade. I mean, it really has been. But there's so many stocks like this where you're in this beautiful trading range where the buys are being bought, but they're selling the tops too, otherwise known as a trading range, and it's fantastic. And then, again, this is one of my go-to names. Not that many. The only bad thing about Alcoa, the options are kind of illiquid on it. That's the only thing. Big spread. But also, if you just get in on the bid and sell on the offer, you capture the spread. We've been talking about that. Been talking a little bit more about order entry lately, because some traders, they're catching on to what we're laying down here, but they're not getting their order entries correct. And again, somebody asked me about, can this be done? Does you have to be a day trader? No, all of the stocks that we trade are optionable, especially on Thursdays and Fridays where we trade those near.
You can get filled. I guess you're looking at like super short-term options.
Yeah, well, generally we're always looking at weeklies. Alcoa is it's just not a liquid trade compared to, let's say, a QQQ or a spot.
Right. So basically, guys, what he's talking about is, the biggest, most liquid stocks. They got weekly options that are expiring. They got dailies coming out now. There's plenty of liquidity in like the Mag 7 and the big ETFs and stuff like that.
Right.
You go to something like an Alcoa, as big and important as the company might be, a former Dow component, the whole thing. That sort of super short-term liquidity doesn't exist. But if you're going out 3 months, 6 months into the future or more, and you're buying options further out, where more my time horizon, where I focus, there's plenty of liquidity.
Yeah.
Right?
Well, so there's just certain contracts where if they don't have enough volume, they keep the spreads open. So again, another tip of advice from Uncle Kenny: don't ever send market orders when you're trading options. I mean, ever. It's just not a good idea.
Dude,
because
that's not true, because when I'm trading SPY options,
SPY QQQ, that's it. Yeah, you've got 2-cent spreads with hundreds of thousands of contracts going off. But
and I know I probably shouldn't do it even then either, but I do.
I never do. Generally speaking, it's always limit. And again, when you're using stops, also remember it's stop limit on if you have a liquid contract. Some of these stocks we do trade, like Rambus or VICR. There's just 2-point spreads. So if you're If you're trading, you got 9 contracts on something that day, you better not send a market order. They'll be happy to rob you for 50% off that spread.
Yeah, be patient, and you say limit orders, that helps, because you want to stop the algos from messing up your orders. Just set a limit order. There you go.
Absolutely.
That's it. That's all you have to do. I think it's what Phil says, when everything's moving really, really fast, slow down, right? Like things are moving really fast, so just slow down. Be like, this is what I'm going to pay, and that's just what it is. So deal with it.
And speaking of that, talking about my favorite product, UVXY, guys, I hope you guys crushed it yesterday. Absolutely. It literally is free money. It's 100. If you guys didn't,
free money, what's wrong with that?
Trade 1 share of UVXY, everybody, so you get the prospectus sent to your house. It's 120 pages that say, don't own this. It's a vehicle. It's a vehicle that just gives you intraday volatility, right? So once that volatility goes away, UVXY doesn't just pull back, it crashes. And you can make money off that every time we're in a moment of volatility. UVXY is built to legitimately go down, guaranteed. It's the only guarantee there is. Read the prospectus. I'm not joking. So yesterday, not only was it an easy trade to make money on, but once UVXY starts to crater, that gives you the okay to go for the rally to ensue. And that's why we've had, like I said, 15 of these days where UVXY was strong. That gives way. You short UVXY, you get the tradable rally. And here we are, still at 607 on the QQQ. And, again, I love this trading range. We stay between 580 and 630 in this 50-point range for the next decade. We're all right. So it, like I said, if you're doing something, you're doing something wrong if you haven't been making money intraday. And that probably is because you're not using VWAP. So get that stuff on your chart. Come hang out with us. Let me show you what it's all about. Left foot.
I love it. Listen, Kenny Glick trades on different time horizons than many people, which I love as a complementary mix to a portfolio, having different strategies, different time horizons. I'm a firm believer in the Holy Grail. Say what you want about Ray Dalio, but math is math. He's right. We know. So adding additional layers to a portfolio and strategy limits the overall portfolio volatility, which increases the compounding of returns and accelerates that. Like, that's what we want. So
yes,
shout out to Kenny Glick. Hit the bid.
By the way, it's 26 years ago today was the top of the NASDAQ stock market, and I was there.
Woo!
March 10th also this is my anniversary week. I've been married 25 years, kids. Can you believe it? Somebody tolerated this face for 25 years. It's insane.
We find a way to tolerate it here too, Kenny. We do.
Kenny, you're going to Iceland in like a couple weeks, right?
Yes. I'm here in the Northern Lights are the best in 11 years, so I'm very excited. Caves and hot springs and no internet, so should be a good 10 days.
They have internet in Iceland.
No, I'm not going to have internet. So, yes.
Okay. All right, Kenny Glick, hitthebid.com. Trade live with him every single day. He'll be live on YouTube at 11 for the long and short of it. We'll see you there.
All right, guys. Good luck today. See ya.
Adios. Kenny Glick. Never a dull moment. Never a dull moment.
I think JC, I think it was like a month ago, around there. Somebody, maybe it was you. You said, we got to talk to Bart. Someone said we got to talk to Bart. Maybe I think it was you. So I said, okay.
Dude, people love Bart.
It's been a minute.
Like people absolutely, they can't get enough of him. Some people are like, who's this guy? But most people are like, wow.
Yeah. So we got Bartolone in the house, in the flesh, in the virtual flesh with us today. So let's bring him out. His charts are in the deck. Rick, I threw him in there. And here he is, Mr. James Bartolone, a.k.a. Bart's Charts.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Bartolone!
There he is.
JC and Spence, what's up, boys?
Dude, so good to see you. Can I just tell you that, Bartolone?
Yeah, man, it's good to see you guys too. How the kids, Spence? How's your boy?
He's good, man. He's learning life. Every day is an adventure.
Are you sleeping?
Well, yeah, but daylight savings time was not fun in this house. I'll tell you that.
Shit,
Normally, yes, we're sleeping. So
awesome. JC, kids.
Yeah.
Dude, amazing. Just got back from vacation down in Miami. Kids had a blast.
Nice. Why do you go on vacation in Miami? Why don't you go somewhere else? You live there.
right. So visit my family. I went to my grandmother's house. Like, you know, it's not, it's, you know, there's, my sister was in town too. So like, you know, you do the thing.
Hey, by the way, man, Kenny's awesome. It was so cool because I am complete 100% opposite of what he does, right? I'm looking at monthlies, you know? So it was really cool to listen to him.
Listen, I
I
love
tried
the
day trading. I
contrast.
sucked at it. I sucked. It was like flying 1v1s. It was like flying 1v1s in the Navy. I know it sounds cool and everything, but I hated it.
Tell everybody what a
dogfight.
Tell I definitely know what a 1v1 is.
We don't know what that is, Bart.
But for other people who might not be familiar, tell the folks before we dive in, tell the folks what the hell you're talking about. You used to fly planes and now you do technical analysis, right? Easy, smooth transition.
Yeah, pretty much. That's how it happened. Yeah. No, 1v1 when you fight another plane. So you come into the merge, right? Sometimes we do 4v. One time I was in a 20 plane dogfight. Remember looking up and there's all these planes. I'm like, who the fuck are we shooting? I mean, what are we doing? So it's just insanity. That to me is day trading.
What year was that?
Oh shit, it was 20 years ago. It wasn't real, it was training. It was crazy. How we didn't hit anything. I mean, it was nuts. Imagine a bunch of like 28 to 32-year-olds and $65 million fighter jets meeting at the merge and all 5 of you are just fighting. It's just fucking nuts, man. That's day trading to me. I would much rather come in from 200 miles, build the picture, right? Get an idea. Okay, it's changing a little bit. All right.
Well, now you live in San Diego. You go surfing multiple days a week. I mean, now it's a much different lifestyle, Bartolones.
It's not bad, JC.
Not bad. Rachel says, "Holy shit, it sounds terrifying." I'm with you, Rachel. I'm with you, Rachel. All right, so guys, so Bartolone. I mean, I was studying for my CMT, my charter market technician designation 20 years ago. And they used to have this thing called the CMTI, where you had like already CMTs, like teaching the up and coming future CMTs to prepare for the exams. Bartolone was my CMT level 3 professor.
Don't say professor.
Dude, true story. And and McNeil Curry, who was the head of fixed income commodities and currencies for Bank of America, right, for a long time, and now he's somewhere else now. But McNeil Curry and Bartolone, I mean, I could not have asked for two better guys to help me out when I knew nothing. Like, you guys opened my eyes to so much shit. In very different ways. Like, he was more like showing me about commodities and futures, and then you were showing me sort of more like how to think about things 3-dimensionally, 4th-dimensionally, right? Kind of like think about things. And, you've recommended books that have kind of made me realize that you are not as crazy as you might seem off the bat. Like, I used to be like, this motherfucker's crazy, right?
Yeah.
Like, what is he talking about? You and I had lunch with Morgan in San Diego once. We walk out of there. She's like, what the hell was that guy talking about?
Yeah, it's an issue. It's an issue.
And so that was a long time ago. And I'm understanding, Bartolone. I really, truly am. And so thank you, first of all.
You're welcome. Thank you, dude. Yeah, appreciate
that. It really helps put things in perspective.
Yeah.
As a human,
especially right now,
and a market participant, both, right?
Yeah.
Right.
It's been, like we've talked about, it's been a 26-year journey for me. Right, just studying and going every day
and going, dude. You're an animal.
Yeah.
God bless.
I'm. It's getting better.
All right, so let's go. Right, because the more you understand, the deeper you can go down that rabbit hole. All right, so let's talk about. I love that you're starting out with a Nikkei and an homage to our homie, one Leonardo Fibonacci de Pisa.
Bam. I mean, it doesn't get any better than that. And it's a long-term monthly too, right? So it just goes back 30 years. Smacked right into it. That's why I did it. I was like, I'm just going to go around the rest of the world for JC. So Nikkei, the sell-off makes sense, right? If you go to the next chart, I mean, and so here's the thing, right? I think we're going to rip higher in the US. Like, look at this Australian All Ordinaries. That's just a simple measured move. That's the ABCD. Hang Seng, beautiful, 1.618. I mean, just all across the world, these patterns are hitting. And
then, so can you just briefly, you don't need to go into a whole scientific dissertation, but generally speaking, these purple arrows that you're saying are, are reaching these levels. What does that mean exactly?
And so the market repeats itself over and over again, right? These patterns repeat itself on multiple time frames, right? So Kenny might be slugging it out in a 1 minute time frame. I'm slugging it out in a monthly. We're still dealing with the same fractals, right? It's just a difference. Things are happening a little bit quicker, right? So if you're in slugging it out in the day trading world, you're looking for little smaller cycles and smaller wins and stuff. Where I'm looking for, it's just my personality, longer term pivots and moves. So what I'm finding is when you deal with the longer charts, the weeklies and the monthlies, these measured moves, what the market does always over and over again, they are where the pivots occur, right? So that's all I'm showing here at the Hang Seng. I want to find out where was the biggest correction. Okay, I got it. Did it repeat itself? It did. And then I take harmonics from those bigger corrections. Like if you go back one, Spence, I think it was the All Ordinaries, right? Australia. The market did that move, that same blue move, over and over again. There's the measured move. It hit it. It fell like a stone. The other things are
that goes back to the low in the 80s.
Yeah, right.
For those of you guys who can't, because Bart goes out of his way to make sure that we can't read the
you need BioVision.
Right.
Sorry, I could do better at that, but I want to show the long.
Bartoloni, as a technician, seriously, listen, I love you, and all I do is give you love, but I got to break your balls too. Like, if you're trying to show a chart, why would you make it so impossible to read the y-axis and the x-axis? I don't understand.
I don't really care about the numbers. It's funny. I just want to look at the overall pattern.
Fuck, I hate giving you so much credit. You're right. I don't either. You're so right, Bartoloni. Shit.
People ask me, I couldn't tell you right now what the S&P's at.
Dude, I know. I'm the exact same way. But you know what, to a fault, because I'm having conversations with somebody and I was like, oh, and then it did this, and then it did this, and then it did that, and then blah, blah, blah. I give you every freaking move that you can imagine I could draw for you, and then, what's the price? Oh,
no idea. No idea. Like, I'm the same way, right?
You're so right.
So, but what the reason I did those first three charts.
So much. I love you, Bart.
JC, the reason I did those first three charts is there's a lot going on in the world right now. One would think these numbers, these Fibonacci numbers, these extensions, the harmonics, they still work. And that's why Kenny's probably just killing it right now. If you can catch some of these swings, day trade. I mean, look at oil. Oil hit a perfect pattern, perfect sell pattern yesterday. And it's just freaking,
but think about it. With the VIX is at 25, 26, whatever it is. That's a 1.5% implied move in the S&P 500 per day. That's 1.5% in the S&P 500. If you the equivalent in the Dow Jones Industrial Average is about 700 points. Over 700 point move per day would just be normal. That would just be that's the benchmark, right? So I expect more on a regular basis, and certainly we've seen that in both directions throughout the day. That's the whole thing about volatility. That's the point, right? You're moving in both directions. So we've seen this before. But that's exactly what this is. It's
a day trading swing trade paradise.
100%. Moves that used to take 3 to 5 weeks are taking 3 to 5 days. Throw up the this is a great chart, Bartoloni. Slide 12, please. So Bartoloni, for many years, has called himself an intermarket musician, and so does a lot of ratio analysis for Bartolones. And so Bart here is looking at a ratio between technology stocks, large cap technology stocks, versus large cap consumer staples, of course, being much more defensive in nature, versus technology, of course, tends to be a leader in bull markets. So, Bart, what does this suggest to you? We hit that extension and now we've pulled back and you buy this dip and tack, or what?
Well, so I was watching Strazza earlier too when I showed up. What was that? What was that? Oh, the man, my computer. Did I lose you guys?
Yeah, what's up?
I don't know. My computer's acting really crazy. Can you guys still hear me?
Yeah, we hear you loud and clear. We're looking at tack versus staples.
Yeah. So I forget. See, JC, I forget what the ratio was, but what Strazza was showing, that was, I mean, if you want to talk about a buy pattern, it was beautiful.
Yeah, that was software relative to the S&P.
Correct.
If you guys want to throw that up,
so that's a buy, and you can see
slide 3.
Yeah, that right there. I mean, I could show you real quick, but you can see that go to the all-time high, go down, go up, go down. That's
I see what you're saying. So, in other words, from the all-time high in 2021 down to the low at the end of 22, that move down is the same move as the high in 24 down to the recent lows.
Bingo.
So
it's a perfect.
So A, B, C, D.
Bingo.
How am I doing? Who's listening?
Yeah, brother. And I just looked at it too. There's like 6 ratios right there. So what happened coming into this all-time high? The market was going up. Nice little correction for what? 6 years. And we completed a beautiful buy pattern. You got to be long that ratio, period. And you get out below that low. So that was I'd never seen that one before. I was like, wow, there's a buy pattern if I've ever seen one.
So
and by the way, it's log scale too. So it's not price, it's actually percentage. So
right.
It's the percentage move.
Slide 2. That's a good point that it's log scale.
Yeah. But it doesn't matter. Sometimes it's price, sometimes it's percentage. Like if you go back, Spence, to the South Korean chart, that's actually a percentage ABCD that was hit. Before I get going, I do want to show you this global Dow chart, JC, because this is one where, boom. Isn't that crazy? You didn't believe me. See, no one believes me.
Love it.
When you stare at these charts so long, you don't even need to measure them anymore. You just see it.
You just see it. No, 100%. No, I get it. I'm with you on that too. This one is a chart that nobody talks about, the global Dow. I throw the global Dow chart up. Spencer starts rolling his eyes. He's like, what is this? Strazza's like, oh, what is this? What does he call them? What is this exotic index? You know,
it's the freaking global Dow. It's the world.
The global Dow. Tell him, Bart. Tell him.
Right? Why wouldn't you be interested?
I don't know.
By the way, the world's at war. You know, it's like I'd be interested in
what else is new, Bart.
So, I think the big thing here is, I put a count up there. It doesn't, violate any rules. But like I said, my counting's like my golf game. Don't trust it when I tell you I got a 6 on a par 5. But what I really want to focus in on here, JC, is the blue. I call it the monad, right? That is the one vector. So you see that blue vector?
The monad, that's the number 1.
Bingo. Yeah. So
see how I know that?
I don't know, man. You must have read some books. But that blue measured move, it's present in every pullback, right? Every major pullback. And the pullbacks have lasted each pullback has lasted 16 months. So that's 14 months, that's 4 months, year and 4 months. So we've completed that. That's all I'm saying. And then when you start looking at some of the ratios of the waves, so it's not a bad count. So if we're going higher from a global Dow perspective, right, we need to get blow through that red resistance line that I showed there. And what's crazy is it hit it exactly. Now, here's some other things too. When you're using the extensions, like the extension from 1 and 2, wave 1 and wave 2, there's actually a pi, 3.142. It's a pi extension. Isn't that nuts? So don't just use 1.618, 1.27. You can use all kinds of different ratios. But the key here for me is that blue measured move. So I don't know how far back we go. When do we go back? 25 years on this? Every time that blue measured move has finished its move in price, there's been a 16-month correction. Does it mean it happens now? Well, 1, 2, 3, 4. We could go 5 for 5. I don't know. We've got looks like a monthly, bearish engulfing, but we still got 20 more days, right, or so in March. But I just wanted to put that one up there to say, okay, from a global Dow perspective, interesting. This has really completed the blue measured move, right? And then each correction has been exactly 16 months. So, I think the next 2 to 3 weeks from a global perspective will kind of really give us an idea if we're going down a little bit. I would like us to, because I want to buy it. I think the Dow is going to rip. And I'm not a gloom and doom person, but there's only one game in town, and that's the U.S. equities. Period. Dot end of sentence. Right. And where are you going to go? You're going to go to the Dow. So I would like it to correct just a little bit more. But yesterday might have been the low, JC.
Bartoloni, I got one more question for you. This one comes from
hey, call up the bonds too. I think this is going to be a multi-year bounce on bonds too, Spence.
Long
Go ahead.
bonds.
Not yet. There.
There it is. Yep.
So I think we're completing about a 2-year triangle. We got one more move down, and I'm long TBT. I've been long TBT since 2020. I've just been holding it. And I've been waiting for 2 years. I'm like, do I cut it now? And I'm like, no, it's not impulsive yet. And so I'm counting 5 waves down into that big support. I think we bounce. And unfortunately, I think it's a bounce for 2 years or more. So that's going to be a ripper. So we want the bonds to break down one more time. Everyone's going to freak out about interest rates. Probably take about 3 to 4 weeks. Bam, we hit that support. I cut my TBT. I'm going long TLT.
Listen, you heard it here, folks. Mr. James Bartoloni, Mr. Bart's charts. I have one more question for you from Dawson. You guys can take the chart off. But Bart, did you feel a life shift at 29 years old and 58 years old based on Saturn's cycle?
I don't know. Sure.
I don't know.
Saturn's the big cube. Saturn's 19 times 19. And then the dude, so 29 times 2 is 58. So we're basically a harmonic from each other. So why not?
I
Look
don't.
at you guys.
I don't know why not.
29 times 2 is 58. So 2 is the octave, right? C, D, E, A, B, C. You know, the octave is just twice as big as the next frequency. So sure, dude. Shift it up, man. Look at Spence.
I don't know what any of that meant.
I know I got some bits and pieces, but altogether.
So JC, I know this is fun. So one last thing I've been working on, I told you. So when you're using time, right? It's all a squared plus b squared equals c squared. It's all the Pythagorean theorem.
Okay.
Okay. But all the squiggles on the chart, every squiggle down to Kenny down on his tick chart, to me on the monthly chart, are honestly due to the planets. And so I'm working with Active Inference AI right now to have it figure out the algorithm of 9 prime. So it's not just 1 planet or 2 planets. It's actually all 9 of them operating at one time. 9 prime, 9 times 8 times 7 times 6, right? And
sure.
it's going to figure out time.
I love you, Bart.
I'll let you know. When I figure it out, when I get it coded, I want to come on the show.
Wait. Not to be pedantic here. Aren't there?
What the hell does that mean, pedantic?
Aren't there 8 planets?
No.
Well, you got
Pluto's back.
No, there's 9.
No,
What?
My very educated mother just served up 9 pies. 9.
Pluto,
and then you got to take it to the moon's node. What?
Pluto's included.
Yeah.
Yeah.
And the moon's node. So Spencer, I might throw all this shit around, but like when it comes to options, the only reason I know a call is going up or you're bullish a call is because it's good to call your mom. And the reason a put is bad because don't put your foot in your mouth. That's how I learned it for CMT.
That's awesome. That's awesome.
All right. Get him out of here. Bart, I love you. We got to go.
Call your
See you,
mom.
boys.
Thanks, Bart.
You're scaring the locals.
Call your mom. That is a good way to. I wish I learned on that 10 years ago. They would have saved me some time, probably.
Dude, Pluto is back. Dude, my daughter was doing an arts and crafting the other day at the beach, and she comes with like all the planets like in rings, and I'm like, yo, where's Pluto? And then one of my sons is like, oh, he's with Mickey.
No, in all seriousness, is Pluto a planet or no?
Pluto's definitely a planet. It was like a moon for like a second. It got Me Too'd, and then it's back, I think.
Oh, damn. I learned a whole bunch today on the morning show.
Mm-hmm.
All right, before we get out of here, let's bring on Dr. Phil, all right?
Bring him out.
All right.
Earl Dog.
What's up, Crow?
What's
Good.
going on?
We're having a good time this morning. Good to be back, Phil. Good to be back.
Dude, how was your trip?
You know, sun and family. I mean, you know, and ocean water and, you know, fish and, you know, ribeyes and, you know, sandcastles. I mean, you know.
Beautiful. Sounds like a great trip. How's the boys doing? How's your crew?
They mature, you know, just something I've noticed consistently, like taking them away for a few days, like they just mature so much faster. Like when they're out of their element, you know, seeing new things, you know, they've never been like on a boat before, like cruising around the ocean. And, you know, that was the first time they did that. And we stopped at one of the little, you know, one of those sandbars. We're playing around. It was like, we're going on a treasure hunt. Like, you know, it's like all like new things for them. So they just mature, like you know, I didn't know this until I've actually just witnessed it, but like, it's obvious, like just get them out of their element, take them to New York City, you know, go, you know, they've never seen that shit before. You take them to New York City, you take them to the beaches, you take them to different things, mountains, you know, like all like very different things. And the maturity accelerates like crazy, dude. Crazy.
You know, that is such a great observation. And it's also a reminder to us to give ourselves novel situations, because we still respond like that. We still have that in us. We still have that like little wonder, that little kid wonder is in us. It's just been covered over by like adulthood and responsibility and paying taxes and, you know, having to work a job and all of those adult things. But that is still in us. So the fact that you're so in tune to it is just with your kids is just,
it's obvious.
It's beautiful on multiple levels.
I mean, it's obvious. Like it's stupid obvious. Like you just see it. You know?
Fantastic.
Yeah.
So here's what I want to talk about today. So I notice the VIX. So it's not just the VIX, right? It's not just, hey, the VIX goes up a lot, and then that is like a reflection of sentiment in some way, right? It's the change in the VIX, right? So it becomes like this, you know, I don't know what you would want to call it, like the derivative, or it's a change, or the gamma, but it's a change in the VIX that is stressful, the most stressful. So a high VIX is stressful. A VIX that is volatile, that is moving, is super stressful. And, you know, if you look at the VIX over the last 10 days or since the beginning of Operation whatever, we've had quite an oscillation in the VIX, even intraday. Like, you know, yesterday, early in the morning, it was, I don't know, 30 or whatever, and then it finished the day in the low 20s or whatever. I don't really watch it tick by tick, but I've seen the oscillation, and that is stress. And what I really want to talk about today, we call it a second derivative. Thank you, Brian. Second derivative. How do you handle that? How are you resilient within this environment of a lot of oscillation in the VIX, with the second derivative is high, as Brian points out? So what do you do, JC? Like, how do you handle that?
Well, you know, I think about the positioning, right? So the positioning, the asset managers were super net short VIX futures to a historic degree. So, you know, we've been talking about how that needs to unwind. Like, that's just unsustainable. Is it normally something that happens over time slowly, or something that happens very quickly, right? Usually it happens very quickly. So maybe we just saw that. Maybe that was the unwind in positioning that the market needed to move on, perhaps. You know, that's how I'm thinking about the VIX specifically. Can it go to 60 or 70 on the VIX or 80? Sure, we've seen it before. What normally happens is that it peaks into the 30s and then collapses, is what more normally happens, almost always, with a few exceptions. So I think with the market breadth the way it is, and the majority of stocks acting as well as they have been, both in the United States and around the world, I'm more inclined to think that it's going to be like most of the other cases, that it peaks in the 30s and then collapses and gets into the teens, you know?
Osprey Knoll. There's the Eric Dolphy poster for you, buddy. There you go. Got you covered. Okay, so I'm talking about, listen, JC, I'm talking about us. I'm talking about us as market participants. I'm not talking about the VIX itself. I
Yeah.
don't know what's going to happen with the VIX. I don't really care. All I know is that there has been not only the sentiment, negative sentiment and fear indicator going higher, but I also note that there has been volatility in the VIX. So it's a volatility, or second derivative of volatility, as Brian is telling me they call it. And I'm talking about how you deal with that.
I'll tell you.
Cope with that, how you adapt to that in a constructive manner that allows you to continue to make good decisions as you navigate a difficult market. And
Yeah.
Go ahead.
You know, I'm numb at this point to it. It was much more difficult and stressful, and increased my anxiety a lot more when I was a lot younger.
Right.
I've come to terms with getting comfortable being uncomfortable. It's kind of like the way that I like to think about it. So Sunday night, my wife and I are at Joe's. The kids are with the mother-in-law. Joe's Stone Crab, eating stone crabs and shrimp. And, I had a key lime pie. Fucking killing me. What do you want from me? All right. I was in Joe's Stone Crab. I'm going to get the goddamn key lime pie. All right. So anyway, so I'm there with Morgan. We're drinking. We're sitting at the bar, having a great time. And Dow's down 1,000 points. Right. I'm like, oh, Dow's down 1,000 points. But Bitcoin was up. Right. There was like some relative strength. I was like, and it was just like, all right. And then the next day, like, sure enough, that relative strength shine, and we rallied higher. Like, you could see a lot of fear. I was a little bit tuned out, right? So I didn't quite see the fear. Maybe if I was more tuned in, but it certainly looked scary. Down, oil hitting 120, right? All on Sunday night while we're at Joe's. I was a pretty cool customer. That wouldn't have been the case 20 years ago.
So experience is definitely
100%.
helpful. You've seen it all before.
Listen, you get punched in the face once, your first time in your life, that sucks. You get punched in the face for the 300th time because you're a professional boxer. You learn how to take a punch.
Right. It's a beautiful thing. My recommendation is that you get healthy, that there are resilience factors that exist related to metabolic health. Sleep and rest would probably be at the top of the list, making sure that you're getting the rest that you need, making sure that you're getting away from the table on the weekends, that you're resting your mind, not just your body, moving your body, taking the time to do that, setting that as a high priority, putting good things in your body, putting nutrient-dense foods in your body, not drinking too much. Those would be, it's very boring, right? The great thing about wisdom is that it is boring, because if it was exciting, everybody would be paying attention to it, but nobody is. Nobody pays attention to the wise actions. People ignore it because they're so boring, because they've heard them over and over again their whole life, and they choose not to mind them. And so my strong recommendation is to pay attention to the really boring things, to the things that will help you endure over the long term, that will help you make better decisions over time, and that will help you, mind, body, spirit, endure very difficult markets, and markets where we're seeing this second derivative of sentiment, where we're seeing volatility, we're seeing sentiment volatility, that will help you endure that sentiment volatility.
Also, your own personal vulnerability, right? So one thing that I have found, right? So everything like, oh yeah, just get yourself healthy and go for walks and eat animal protein and you sleep well and everything will be fine. Like, yeah, like in theory, those things are very helpful. Yes, of course. In practice, from a portfolio allocation standpoint, earlier on, I was way too big. The percentage of all the money that I had in my 20s, and that was like an unsustainable high that causes anxiety because you have so much exposure. Over the years, having different strategies of different time horizons basically means that at every day you got some things doing well, some things not doing well. Every day. Even when volatility spikes, our energy stocks are doing great. Our tech stocks probably aren't, or whatever, but our big crypto is. And in my long-term portfolio, if the S&P falls 8%, I'm going to put in twice as much in that strategy. And then like you got different things going on. And that in practice and execution is what has really, really helped. Like, oh, you want to feel good? Then exercise. It's like, oh, wow, I feel great. Maybe because I've been exercising, right? You want to like have less anxiety, position size responsibly, have different things going on in your portfolio and get comfortable with being uncomfortable. And all of a sudden you're going to have less anxiety and you can enjoy the goddamn stone crabs at Joe's on Sunday night with your wife instead of bugging out that the Dow's down 1,000. You know what I'm saying?
So experience. So this is actually a great discussion because there's two points going on here, right? I'm talking about the health component of it. You're talking about the seasoning and experience component of it, and aspects of that seasoning include risk management, position sizing, really diversification as well, because you have, you are invested in multiple assets that are not correlated.
Right.
Which
by
is,
design.
What's that?
By design.
By design over time. You sort of came to that naturally, or did you make a conscious decision?
No, it was really Ray Dalio and Chris Kane that finally drove it in my head. Ray Dalio with the Holy Grail, Chris Kane with some of his white papers. It was really just math that I was like, oh shit, this is how to do it.
But you didn't internalize that the first time you heard it, did you? Like it.
A little bit.
A little bit.
I kind of figured it because it's just math. So when you see the math, it's like, oh wow. Like the first time you see a compound interest chart, you're like, oh shit. Wow. It's like like the first time that you see like what you need to make to overcome a loss. Like if you take a 5% loss, you need a 6% gain. If you take a 10% loss, 11, whatever. And then if you take a 50% loss, you need a double just to get back. Like once you see that spreadsheet, you're like, oh, like there's certain mathematical moments in your investing cycle that there's certain aha moments because it's just math, no opinions. It's not like the guy from JP Morgan or the girl on TV or the magazine or the JC or whatever. It's like literally, oh, it's just math. You cannot argue against that, right?
Spencer, I will tell you this, that very infrequently in my life have I seen young investors integrate that experiential component so quickly as I've seen it here at Stock Market Media with some of the youngins that we have playing. And no doubt it has to do with day after day after day after day after day being around and being influenced by guys like JC and Strazza over and over and over again. They see it, they're managing risk, they're in assets that are not correlated with each other. It's really incredible to see. I mean, you got young guys, Ricardo and Sam and Fonzie and Riley, who are position sizing and looking at different assets in a way. I would say I would add PERS to that list too. I would say PERS is probably a great influence as well. See how those boys interact with him as well.
Instead of YOLOing natural gas options on Thursday inventories like I was doing when I was in my 20s.
And these days, especially being on Coinbase and being just fucking, trading shit coins and fucking DraftKings and just betting on shit that's stupid and, really sort of negative probability, negative outcomes. Great. Yeah. PERS is super unique guy, Harminder. Great comments, by the way. I'm trying to configure my desktop so that I can look at comments while we're talking because I got really bad at that. And the quality of the comments are incredible. Shout out Osprey. Shout out Robert Pesci. Shout out Fatal 9998. And of course, Harminder. Great. I mean, just a great stream of comments. As always, it's an incredible pleasure. And so, the takeaway here is number one, seasoning and experience and getting with guys who have that, like JC, like PERS, like Strazza, like Spencer. Spencer doesn't, he is not as And like myself too. I mean, I've been around the block 5,000 times. I could tell you all about the NASDAQ bubble and the crash there going back 25, 30 years. The one side to it is the seasoning and the risk management and the taking it all in stride, being able to go out with your family on a Sunday night when the market's really down big. And then the other part of it is what I call fitness alpha, and that is really taking great care of yourself so you have a greater capacity for resilience. You have a greater capacity to bounce back after you've gotten your ass kicked on a Tuesday, to come back Wednesday and be ready to go all over again.
Great stuff, Phil. Always
Phil,
a pleasure.
I got one more question for you, Phil.
What's up, bro?
Hard pivot here. So, cottage cheese in the eggs when making scrambled eggs?
I've heard about that.
Cottage cheese is great anytime,
like half
anywhere.
a cup, 6 eggs, and then half a cup of cottage cheese. You throw that in there. What do you done that before? I never did it.
I never did it, but I have zero problem with that. Cottage cheese is great.
Jay. Yeah.
What's that?
I've heard about that. That's the thing that people do now.
Because you're adding additional protein and deliciousness.
Yeah, it's great.
2 good things, right?
Yeah, I have no problem with that whatsoever. Personally, I like to put butter in it, and I like to put bacon or fish or vegetables or mushrooms. But I got no problem with cottage cheese. Cottage cheese with berries is fantastic as well.
Dude, cottage cheese and the scrambled eggs is a new one to me. I'm gonna have to try it.
Where'd you hear that? I haven't heard that before.
On the Twitter, I like all the cooking guys and stuff like that. The algorithm knows that I'm interested, so kind of like
Let me tell you, it's just like the bad health advice. It's like the bad market advice. It's like the bad culinary advice. A lot of what you see there is, maybe go try it. Maybe I'll try it, but it sounds like, I don't know if I would do it. I love cottage cheese. I love berries. Not sure I would try that.
I'm gonna try just for fun. I like to try things. I'll give you some feedback.
By the way, eggs are super healthy, and they're the cheapest I've ever seen them out in the marketplace.
Oh, I had one more thing. I didn't realize that 1 pound of ground chicken is like 90 grams of protein.
Yeah,
that's crazy.
1
pound of ground chicken is 90 grams of protein. That's a lot.
Beef, fish, chicken is insane protein per calorie and per pound or whatever, per ounce. It's just insane. The nutrient density of those foods of animal protein is off the charts.
Right.
All good.
All right. On that note, let's get out of here. Come up next, there is no open bar today. Strazza's in Miami, so the open bar is closed. The open bar will be reopened next Tuesday. Kenny Glick will be live at 11. Sean McLaughlin live with What Are My Options today at 1 o'clock Eastern Time. If you have any questions about an options trader, if you're looking for ideas, get with Sean today at 1 o'clock right here on the channel, and he will answer your questions for you right then and there. That's what we got today. Thank you to Bartolone. Thank you to Phil. Thank you to Kenny. JC, great to have you back. Chat, great to have you as always. Everyone go make some money, all right?
Go get them. Y'all responsibly.
I can't take no loss. I don't even know what it costs.